Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and this is our weekend question and answer period. So I got a question from Jim, and Jim wants to know what my daily routine is from the time I wake up to after the market closes. Now, I've already touched on this topic once before, but since then I've gotten a lot more readers, so I'll go through my routine again. I'm definitely at the computer by 7:30, no later. Sometimes earlier, especially if I'm working through a problem that I can't figure out. I may spend some more time on the computer earlier in the morning. I tend to make my best choices and my best decisions early in the morning when my brain is fresh and I've had a good night's sleep. But I usually go over my 400 or 500 stocks that I look at every day. I look at them 3 or 4 times a day. I have pictures in my head of what these look like. I could draw you a picture of them without even looking up to see, the chart. But then I look at the pre-market. I always have an expectation. I know some people don't think you should have expectations, and then you won't be surprised. But when you're in the business I'm in, which is predicting the future, not an easy task. I'm not predicting the future in everything, but in stock prices, trying to predict the future. So I need to have expectations, because if they're met or if they're not met, that's a signal for me that maybe I need to rethink. So that's why expectations are important for me. So we look at the pre-market. We're always trying to determine where we are on the road of the trip. Stocks are always on a trip. They're either on a trip going up, they're on a trip going down, or they're on a trip going sideways, getting ready to go up or go down. So I'm always trying to calculate where we are on that trip, and when do we think that trip will be over and there'll be a trip in the opposite direction. So it's always a game of probabilities and risk and reward. So that's what's going through my brain all day long. Then by the end of the day, I'm pretty well spent. So market closes, I usually go sit in my easy chair, put my head back for an hour or so, close my eyes. I don't know if I'm meditating or I'm just letting the information catch up with my brain, but I'm also trying to put together my thoughts for what I'm going to say on the video that night. So then after the video, then I relax, and maybe I go to the gym, and then I go to bed. And the next routine the same day. It's not a job to me. It's not work. It's a passion. It's a hobby. It's a business. From the first day I ever drew that first line on a chart in the office of the specialist firm I worked for back in 1968, I got hooked, and I've been at it ever since. And I just have a passion for the game. It fulfills that primal gene that all men have of hunting, searching out the prey, and it's rewarding. It's challenging and it's rewarding. And I also like teaching and helping other people. I've been around a long time. I don't claim to know everything, but I do have a lot of experience that I can pass on. Okay, so that's how I start in my day, and a little in between. Okay, I have another letter from, I'm probably going to mispronounce this name, so I'll spell it. Madhu. Madhu? I hope that's right. If it's not, I apologize. Good question here. I read this question, I shot off an answer, and then I reread it. I said, there's more to this than first met my eye, because it touches on a topic that's dear to me. The question reads, basically she wants to know, or I'm not sure if it's a she, sorry, what they mean when they say the lows held. And the dilemma they're having is it on an intraday basis or on a closing basis? And they're talking about, if they put a stop order there, if they're waiting for it to close to see if it violated it, it may be so far down that it's too late to sell it. Or if it's going to be on an intraday basis, they may get stopped out and then it comes back again. So it's truly a dilemma, and everyone, trust me, has experienced what this question is about. Okay, that's why I don't deal with stop orders this way. When people look at the support area, everyone's looking at the same area. It may not be the exact same price, but it's the area they're looking at, and they all tend to put their stop orders in the same place. So sometimes it's the stop orders themselves that create the break, and then it comes back. But usually, if a stock is going to break a support area significantly, it's usually because of news, and it will happen so fast, and it will be down so fast you won't even have a chance to think about it. So it's usually a violent move. It's not something that trickles down and trickles back. It's a very violent move when they usually break support or resistance. Same thing on the upside. When they want to go through resistance, they explode. And same thing on support. But the stop orders, there's no answer. I'd have to see each individual chart. There's no real answer to this question, but except a better place to put your stops. You either put them lower than everybody's going to put them, or put them higher than what you think people are going to put them. But don't put them in that one area where everyone's going to be with you, because that's what creates the disparity in the market at times. But it's a good question. I hope that is helpful. Okay, I get a lot of questions about oil. I don't trade oil, but I am watching it, and I have an opinion on it. I got a letter from a viewer of mine who corresponds with me fairly regularly, and he informed me that he's in touch with some real experts in the oil market, and they're all predicting that oil has seen a top and it's going down. And so he was in a dilemma that he's trying to figure out how can the market go down and oil go down at the same time, and that was the question he asked me. So I quickly looked at the oil chart, and I don't see any signs of oil rolling over. Does it look a little overbought? Yeah, but are there signs that it's going to go down? I didn't see it. So I wrote back. I said, I don't know who you're talking to, but I don't see it. Anyway, 2 days later, I turned on CNBC, my reverse indicator, and there's two more experts on there telling you that oil is definitely going down. It's seen its top. And so we should be buying the airlines and all these other energy-related stocks. So, okay, boom, Friday, breakout new high up $11, all-time new high. So it's clearly a supply and demand factor, okay? The more buyers and sellers, whether they're buying the futures or they're actually buying the oil, the price is going to go higher. I still don't see where oil is getting ready to roll over. Does it look overbought? It always looks overbought, but there's no signs of a big major rollover yet. What's ironic, this is what's ironic about this whole story, is Congress is now going to investigate the speculators. They're going to blame the speculators on the price of oil, when in reality it's Congress's fault. Congress has done nothing in 20 years to help increase the supply side of this equation. And it's the only way this is going to stop. The supply side has to be increased. You either do it by drilling for more oil, building nuclear plants, or burn more coal. I don't know of any other ways around it. Solar maybe, but the major thing that the supply side has to be increased. That's the only thing that stopped the tulip bulb bubble. They started growing more tulip bulbs, and boom, it was all over. But what's ironic is Congress now is going to take what they're responsible for and put it on the shoulders of the speculators. It's crazy what's going on in Washington. And until the anti-drilling protesters one day can't fill up their cars with gas to get them to the anti-drilling protest, then maybe their ideology will finally turn into reality. And that's my take on oil. Until Monday, this is TK signing off.